Hello, I'm John Crowther. Welcome to This Week in the Markets. The Federal Reserve this week kept the Fed funds rate unchanged at 4.25 to 4.5%. The summary of economic projections, the dot plots, shows that the Federal Reserve sees rate cuts, possibly one or two by the end of this year, but sees inflation because of tariffs being uncertain and actually raised its forecast for next year for inflation and lowered its forecast for GDP for next year as well. In this press conference, Chair Powell talked about the idea that the forecast is somewhat cloudy because the fiscal policy of tariffs under the Trump administration has yet really to take hold. For its part, the stock market rallied off of recent lows, but still below its 200-day moving average, and the 10-year Treasury stayed in and around 4.3%. One thing I'm looking at right now is the word transitory that Chair Powell talked about yet again on Wednesday of this week. He talked about inflation being transitory in 2022 and 2023, and he rued those words. Hopefully the use of transitory for tariffs as it relates to inflation also is something that it can be a feather in his cap for Chair Powell's legacy. I'm John Kryler. This was This Week in the Markets. Have a great week.